Wheaton Precious Metals is a precious metals streaming company with a portfolio of long-life, low-cost assets. Its business model offers investors commodity price leverage and exploration upside, but with a much lower risk profile than a traditional mining company. I'm delighted to be joined by the Chief Executive, Randy Smallwood. So, Randy, I'm intrigued. Welcome. In layman's terms, how does streaming work?
Well, thanks for the opportunity to join you, Sarah. I always enjoy this. Streaming, you've described it very well, actually, already. Streaming is a financing method that we used. We created it about 21 years ago when we started this company, and we purchased the rights to a percentage of typically byproduct metal, but the rights to a percentage of the metal that's being produced from a mine by supplying a capital payment up front, a large amount up front. What that does is gives us the right to receive a percentage of that metal over the life of the mine at a fixed cost on a per ounce basis. For us, we're focused on precious metals, and so everything we get is precious metals. And so the advantage to us and our shareholders is that we get the exploration success. These are life of mine agreements. These go for as long as the mine operates, we will get our percentage of that metal. But we get it at a fixed cost, and so we don't have the same inflationary pressures that you would have if you're investing into a traditional mining company. And the fact that as that metal gets delivered to us at a greatly reduced cost, typically about 20% of the spot price, we of course have some leverage on the commodity price. So our shareholders, our company outperforms the actual precious metal itself. And all of that combines to what we think is the best way to invest into precious metals.
Because your most recent news included a reference to the Hemlo mine, which is very familiar to UK mining investors. How does this transaction work for all parties, and how do you benefit from a financial perspective?
Well, it was an acquisition of the Hemlo mine from Barrick. Barrick had the asset for sale. It had become non-core to Barrick. And so we teamed up with another group and we supplied a large amount of the capital. I think in the end, probably about $330 million towards the purchase price of this asset. And for that, we're going to get a percentage of whatever gold is produced from that mine. And when that gold is delivered to us, we will pay 20% of the spot price, which means that every ounce that we get will have an 80% operating profit margin on top of that. Now what that helps the company do is it's of course sourcing that capital up front, but it also gave confidence to a lot of shareholders that Wheaton, we have a strong reputation for technical excellence. We really focus hard on the technical aspects of reviewing mining projects. And so the fact that Wheaton had its so-called stamp of approval on this project helped the company go out and also raise additional financing to fund the actual acquisition itself. And so we're excited. It's a mine with a long Canadian history, but it's now got new focused ownership. It's been a non-core part of Barrick for many, many years. So having focused ownership on Hemlo, I think, is incredibly exciting. And this was a way to facilitate helping that happen. So looking forward to how Hemlo begins to grow again.
So also exciting is your most recent results. Record revenue achieved over the second quarter, $503 million in revenue, $292 million in net earnings. Is this likely to be a typical year, a typical period? Is it going to be typical numbers going forward, or was this an exceptional period unlikely to be repeated?
We're starting. I don't think we could have timed this better. We've made a number of acquisitions. On average, we were investing close to $1 billion a year for the last 6-7 years into new projects, and they're just starting to come into production. We've got 4 mines contributing production this year. Hemlo is going to be our 5th new mine as that transaction closes. We've got 2 new mines coming into production next year and another 2 mines the following year. So for us, our expectations this year is the start of a extended growth cycle where we take our company from just over 600,000 gold equivalent ounces per year to, I think, by 2030, 2031, we should be over 1 million gold equivalent ounces per year. 40 to 50% growth without any new acquisitions. And so it's incredibly exciting times to have precious metal prices running the way they have been and gaining the way they have been, because at the same time we are ramping up our production. And so we're seeing the combined benefits of this organic growth, all these assets that we have, along with a much stronger commodity price, And what of particular interest is silver. Our company has very strong silver component. About 35% of our revenue comes from silver. And so seeing silver shooting up over $50 per ounce is very exciting for us. It's record highs in both gold and silver. That can only translate to record earnings on a continued basis. So combined with our growth, very exciting times.
So therefore, is your interest pivoting towards gold and silver above the other markets in the basket that you've got, the other metals in the baskets you've got?
It's actually always been focused on gold and silver. We do have a little bit of palladium. We've got some platinum coming from the Platte Reef mine towards the end of this year. We're going to start seeing some platinum. And we've got this little smidgen of cobalt coming from the Voisey's Bay nickel mine in Canada. But it's never going to be substantive. We are focused on gold and silver, and currently close to 98-99% of our revenue comes from gold and silver. That is our focus, is the precious metal side.
Now, the recent shareholder update references how you are positioning yourself for the next era of innovation and growth. Are the people in place to assist with this, and what form will that growth take?
Well, really, it's about reinvesting the cash flows that we're generating. We should be pretty close to $2 billion, if not over it, depending on how gold prices and silver prices do for the rest of this year, in free cash flow this year. And so when you add that up, it's, our objective is to continue reinvesting that into solid, accretive, well-structured transactions. And Hemlo is a great example of that. We're, of course, very busy. These record high prices mean that there's lots of companies looking to build mines and develop mines, and we are a source of capital to help get those mines built. And so we're very busy and confident that we'll have a few more transactions. If we can't spend the money fast enough into the ground, into quality projects, then it goes back to the shareholders through dividend. And so our promise is a progressive dividend. There will be growth, and I think the balance sheet is going to dictate how much growth there is on the dividend side. I'm hopeful that we continue to find new opportunities to continue growing our company and pushing us up well over 1 million ounces a year. But, I'm not going to commit to that at the cost of good, accretive transactions that are well structured. Something that's very, very important to us. We've held our principles in terms of doing these transactions. We're not going to change now. The path has been very good for us, so why would we change?
So you mentioned dividends there. How would you describe your dividend policy? Progressive or prudent?
I'd say progressive, but it's never going to be at the cost of growing our business internally. In my eyes, the first priority of us as a management team, and the beauty of our $50 billion U.S. market cap company is that we've got a total of 42 employees. No, sorry, I think we're at 44. We just hired a couple more, so we're now at 44 employees. And so it is a very light, efficient team, agile team that actually doesn't overburden that. But yeah, we've got that agility to sort of react quickly, but also not burden the company down if we're not active. And so the dividend policy has always been about growth. It's a matter of how much growth. It is progressive. There will be growth every year. And so our approach has always been number one is to continue to try and grow on the asset side. But if we can't, then add it to a dividend.
I just want to ask you about your dividend reinvestment plan. What's the uptake like from shareholders, and would you recommend that your peers adopt this initiative?
Well, in fact, we've seen quite a few of our peers do this. The dividend reinvestment plan is really because we find the best way for our shareholders to actually hold gold and invest into gold is to invest into our company. We believe that the extra leverage, the fact that we pay a dividend, it's much more attractive. It's a risk profile similar to just owning bullion, but we have growth, we have expansion potential, we pay a dividend, and we have leverage. All of that makes, in our eyes, Wheaton the best way to invest into precious metals. And so we're trying to encourage our shareholders to continue and take that dividend, reinvest it back into the company. So it's an attractive program. We've seen a healthy uptake in that, but I hate to say it has been less and less over time as the dividend has grown. And so it is still, though, I think, the best way for people to reinvest that dividend and keep it back into the company itself.
Just a couple more questions, if I may, Randy. And another initiative is your $1 million Future of Mining Challenge. How does this work and what's the upside for you and the industry at large? I'm thinking collegiate, fosters innovation, secures the brightest minds to work in the industry.
Well, it's a healthy prize, and it is a prize. It's not an equity investment or any type of residual ownership interest. It's just an outright gift prize towards an innovative approach. And, we are part of a bigger, broader industry, so this isn't even restricted to our partners or projects related to projects that the research related to projects that we've invested in. It's a wide open opportunity for the best minds in the world to come forward with their thoughts about how we can actually produce more with a lesser footprint. And this year's focus is on water, one of the most important attributes of in so many parts of the world, such a rare commodity, such a challenged commodity. And so we need to find ways to be better with and more efficient and more effective with and more productive with the water that we are consuming. And so the focus this year, I think, is a really good focus. We've had incredible uptake in terms of the first round of proposals, and I'm looking forward to this. Will be our second annual one, and this is something we're going to keep going. It's a great way to sort of stimulate advances in technology to help us as a resource industry even advance further down that responsible extraction route and delivering the minerals that society needs. And so really excited about the uptake on this one, and some great ideas coming forward. Looking forward to choosing one. It's going to be a challenge, choosing one to be that prize winner.
And when will we hear who the prize winner is?
We usually schedule it for the Prospector and Developers Association of Canada conference, which is the first week of March in 2026.
Okay, so I'm speaking to you in October 2025. What do you hope to achieve before the end of the year?
Well, it wouldn't be bad to tuck in another deal or two to continue adding to our growth profile. There's definitely a healthy appetite out there, but we're not going to do anything that isn't well structured on good, solid assets. And so we are very selective about what we invest into, but it wouldn't surprise me to see us add in another asset or two. We're very, as I said, with high prices like we're seeing in both the gold and silver space, and now copper starting to run. We're starting to see a lot of companies investing into new mines or expanding existing mines, and they always need outside capital. We are blessed with an industry that chews through a lot of capital, and our business is supplying some of that capital. So hopefully add a couple more. Every day I wake up and enjoy what gold prices are doing and what silver prices are doing. Seems to be a record high on a daily basis. And so, it's interesting to see what we're going to, what kind of a gold price we're going to see by the end of the year, what kind of a silver price we're going to see by the end of the year. This is, there's a real correction going on. And I think what we're seeing is precious metals take their rightful place as a serious store of value and measure of value in today's society. And so, exciting times.
Many thanks, Randy Smallwood, Chief Executive of Wheaton Precious Metals. It's been a pleasure. Thank you.